Welcome to Bears in Exile. Today is Friday, April the 12th, and this is a quick hit on the indexes. I'll also be doing one on the metals late tonight or this weekend, since they had such a spectacular day. But anyways, away we go with the indexes. Last night we were saying that the 60-minute time frame looked really good for downward movement, and that the daily was had some positives for it, but that things continued to develop there. And what did we end up with? Well, we ended up with a really good decline right out of the gate, which is what the 60-minute was looking for. Unfortunately, they were able to turn this sucker around, and as you can see here on the Dow, ended right, just barely, no, not even negative. It was totally flat. So, very impressive movement by the bulls. Absolutely. As we can see here, we have the continued building of this lower hump on the MACD histogram. The MACD, of course, is still positive after doing its bullish cross. The RSI taking down, the CCI taking down, the stochastics very lazily trying to turn at a very possible top, and the 14-day RSI moving average a tiny click down. So the daily, yes, it looks wobbly. Yes, it looks like it could fall over. Has it started? No, it hasn't. 60-minute time frame. This was the nice one from last night. And we did get a really nice move down. Really nice move down. I mean, it was on the brink of no return, right to the edge of its support. Had it been able to bust that, it'd have been going down, oh boy, a couple of 100 points at least. But they were able to save it. And old Ben Bernanke and his dirty tricks. Anyways, we can see here, yesterday we had the stochastics high, the 14-day RSI moving average high. The stochastics came down and finished their move to the downside, which was only about a 50% move. 14-day RSI moving average is still on its way down, but CCI, RSI also ticking back up along with MACD histogram. The MACD is still pointing down, but overall this is more positive than negative. This is a secondary reset back to the 14-day RSI moving average. And once it gets there and completes, then we can have another decline. But for the moment, we have nice setup here for movement up. And this sure seems like the moves up are stronger than the moves down, well, obviously. So the ability to take out the current high is a definite possibility, which would force more shorts to cover. So something to be aware of. But we definitely have our first up done. We definitely have, I believe we have our first down done. Now it's time for another up. And then we should have the real down. And maybe I should write up something this weekend and make that a little more clear. It's just the size of the moves. You expect all of them to be like equal distance or something. And that isn't turning out to be the case, unfortunately. Dow Jones Transports, we talked about that last night. Just that it was in this formation of descending highs. That was last night. And that sure seems to be pretty darn good still at the moment. I think that this looks massively unhealthy. We still have the descending highs. We have a lower close than yesterday. This can all be attributed to the long-term moving average bar, which is still very well separated, very powerful, and the need to damage it, collapse it, make it breachable. To that end, 14-day RSI moving average continues its move to the downside. The CCI, stochastics, RSI all appear to be turning. The MACD is not impressed one way or the other, although the MACD histogram is pulling up. Best thing here would be to re-enter the bar and damage it. Really, really good. I mean, I think it's too strong at the moment to be able to break in one pass, but damaging it, yeah, that's entirely possible. It is above the major price consensus level, which was pierced today. It would be a warning sign if it's able to maintain above it for too much longer. That would be a warning sign to me. SPX, there's not going to be too much to add beyond the Dow, except that it was weaker than the Dow. We have a hammer. It is not at the top of a possible range. So in that regard, doesn't mean too much. Working off a little bit of the topping area, but not really. This is still a topping area. We still have some warning signs in the case of the CCI stochastics RSI, just like the Dow, ticking down on the 14-day RSI moving average. Monday is going to be very interesting. Very interesting. Either this is going to go to a new high, or it's going to show continued trouble and then run into trouble. So we'll see. It's just so darn close. So darn close. Now moving on to the VIX. Now here's the problem. Here's the fly in the ointment, and the reason why, even though the SPX doesn't look that great, I definitely have to give it the benefit of the doubt. The VIX ended with a new recent low. Very bad sign, very bearish. Ugly candle all the way around. Even with the Dow at its lows, this was just not doing too well. Yes, we still have a bottoming area. 14-day RSI moving average ticking down, stochastics down, CCI up, RSI barely up, down on the MACD, down on the MACD histogram. This is ugly. So it would appear that the gap fill that we had talked about in the past, we're hoping that it would just be a partial. It would seem to suggest that it will be a complete fill, which is 56 cents from where it is at the moment. And needless to say, that would be plenty of pain for the bears, especially breaking out to new highs if this declines to do that fill. But I think that once that fill is finished and the floor holds, then you'll have the counter move, the real one. So that's plenty of time for all of this to finish setting itself up. And going on to SPX, SPY, to look at our volume information and see if anything has changed. Because we were in the danger zone for the volume weighted MACD to turn positive, and it's right there at the trigger. So this could easily turn into a green. We'd have 3 greens, 2 majors, 1 minor, and that would be very bad news for the bears. The only positive here, we got to tick down on the unbalanced volume. Still do not trust this to just go down and go through the trigger line. If anything, going down and then bouncing off of it once again seems to be the order of the day. But when it finally switches, that'll be a day to rejoice, I suppose. So anyways, that's about it. Not exactly what I wanted today, not exactly what I was looking for today, but it did fulfill the bearish part of the 60-minute chart, as well as maintaining the good parts of the daily. So yeah, I guess it is what it is. I'll be on the outlook for a downtick. Man, we could have had it today. That's how it goes. As always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption of time purposes only. Thank you.